Hello, and welcome to the Shoot the Moon podcast. From Revenue Rocket, we are the world's premier M&A and growth strategists for IT services firms worldwide. I'm joined by my partner, Ryan Barnett. We're filling the chair here as our other partner, Mike Harvath, is touring the world right now. How's it going, Ryan?
It's going great, and Mike's away. We spent a little bit of time doing some research, and one of the things that we found, it was just to get into, is just how much we talk to people. And so, in the last year, we've had thousands upon thousands of conversations, many of them very lengthy in nature. As in the world of IT services M&A, we get to have introduction calls and meet people for the first time, and we get to have meetings between potential buyers and potential sellers. And it's amazing the amount of conversations that we hear. And wanted to take some time and reflect on some real conversations that we've had that sellers should really, really be aware of when they are talking to potential buyers. So today's topic, Matt, here, real questions buyers ask when buying IT services firms. And so I'd love to discuss that a little bit. Matt, I mean, you've had quite a bit of conversations going on here. When we think about those sellers going to market, why are these kind of questions important? And then we'll dig into some of the questions.
Yeah, Ryan, thank you. And first, kudos to you, Ryan. Ryan is becoming our advanced leader at the use of artificial intelligence. And so our ability to utilize AI to capture some of these strategic themes is absolutely incredible. So it's a clue into all of you out there to continue to build your AI chops because it's super valuable. In general, right, what we're talking about here is sort of common questions and themes that buyers are bringing forward as they are continuing to develop their go, no go decision related to an acquisition opportunity. In addition to that, formulating their assessment of enterprise value of an acquisition and a target, and then also how they're thinking about any term structure, retention of people, and then starting to line up and develop their understanding for post-merger integration. So it really covers the gamut, and what's so critical about this is we have found some of these common themes that buyers are looking for, and that sellers should be ready with, and sellers should understand, so that we can position appropriately and clearly for buyers to really understand the opportunity that they have in acquiring firms.
Yeah, that's a great setup, Matt. And when we think about taking this approach, and if you listen to this podcast for a while, you have heard us talk about strategic fit, cultural fit, and financial fit. And no surprise, when buyers first start out on a journey, they're really thinking about the strategic fit. So buyers ask questions around your existing service offerings, the geographic coverage areas, and how you run your business today. They typically ask about how you're billing, for example, a recurring revenue model. They talk about your customers and the opportunities that you have to really establish the fit between the two organizations. And they often look at how you've grown your business through acquisition or organically. And so, Matt, when you think of that strategic fit and people are thinking about like offerings and recurring revenue or customers, what advice can you give to sellers to help address that question clearly and concisely to help that align?
Yeah, there's three, real consistent themes that we see. One is buyers are looking at the acquisition target as a means of understanding how it fits into the buyer's existing service offerings service and or product offerings? Does the acquisition target complement those existing service offerings? Does it extend and or fill gaps in the current service offerings of the buyer? And or does it make them better? Does the seller have advanced and better service offerings that is going to make the buyer more valuable? Another common theme is geographic, and sort of that plays into overall market expansion. The buyer is assessing, okay, does this give me access to a different geography? Does it give me access to a different customer base? Does it allow me to potentially move up in my customer base into more of an enterprise customer, et cetera, et cetera? And so it all goes along the lines of expanding the overall market potential. But one of the key things that we do see regularly is geographic expansion. Sometimes this comes from firms that are outside of North America that want more presence in North America. Sometimes, for example, in the managed services space, they are looking to be recognized as a nationwide player. And so looking at acquisitions geographically that can fill out that opportunity. And then finally, assessing the operational synergies, and somewhat goes along with that the ease and or complexity of post-merger integration. Obviously, if there are operational synergies, that allows for profit realization because you're able to remove any duplicate functions. You're able to streamline potentially processes and operations to go faster and save money. And so that's another key theme that people are looking at strategically as they're formulating and verifying their investment thesis.
And I think sellers should try to be prepared for that. So if you can understand where those buyers coming from, perhaps the geographic locations that they're in, and you're in, and finding some overlap or expansion. The same with the service line. If you can find some service line of where you're doing things together and winning, but maybe you as a seller are bringing something to the table of a new service line offering that the buyer doesn't have. That can really help bolster value and help fill in some gaps in the right way. So I think as we've always said first, that strategic fit is the most important thing, and how a buyer and seller come together and kind of find that 1 + 1 = 3 scenario or more. That's important.
Yeah, one other thing that is, I think, important in the strategic lines, Ryan, is the context of a platform investment versus an add-on investment. And many of the same themes are going to resonate, but highlighting different things in the context of being a platform versus being a strategic add-on. And investment, I think, is another important theme to consider as it pertains to that strategic alignment.
Yeah, absolutely. It's one of the questions we hear so much is the ability for someone to scale and build underneath under that platform, or if you're going to be just part of something else, kind of that add-on. Great point, Matt. I totally agree. If we kind of switch gears here, we go from that strategic fit, and we just go through and look at perhaps this is maybe farther down in the process, but not necessarily. Buyers are often really starting to do financial due diligence right away. And so they oftentimes, after finding that strategic fit and you have an introduction meeting and you're getting to know each other, the common request that comes out of that is typically, well, what do the books look like? What does your P&L look like? Your balance sheet, your forecast, how have you been running the business today? So questions then switch from how does this fit together to what are we talking about here? What are the actual revenue to the in the P&L? Matt, what are a couple of things that people start asking, what buyers are asking in that financial due diligence questions?
Yeah, absolutely, Ryan. I think first and foremost, obviously revenue. And as you start to break that down, it's revenue growth, right? What has been the historical, call it 5-year CAGR in revenue growth? What in that has been organic, natural growth of the business? Is there any acquisition-driven growth in there? And then, continuing to peel the onion on revenue is what are the different revenue types that are recognized? Are Is there faster rates of growth within different revenue types? Are there faster rates of growth within different geographies, et cetera, et cetera. So really a firm grasp on understanding revenue, the different types of it, and how it happens. Second to that, obviously, is profitability. Overall net profitability is important. Oftentimes more important is the margin drivers to overall net, income. What's the gross margin health? How are you benchmarking gross margin against your industry peers? Are there is there is there anything different in the service lines as it relates to gross margin? And I think that those are oftentimes, really, really important because firms are either assessing, hey, great gross margin, they know how to position accordingly, they know how to manage their overall cost of goods sold appropriately to be able to drive a industry leading gross margin. Or, okay, there's opportunities for improvement. And oftentimes buyers are thinking to themselves, well, I've got a history of driving, best in class gross margin. I'm going to be able to work with this firm to improve, their gross margin. So, that's another key point. And if you think about it as a seller in the context of readiness, how do you position appropriately? How are you clear and transparent with these requests, with these questions around revenue and profitability? Now, going from there, obviously, you go down the path of continued due diligence towards an offer. People are certainly looking at overall deal structure considerations, openness to flexibility in deal structure, in cash versus equity earnout, seller notes, et cetera, et cetera. And then obviously, sort of marking that against what are, appropriate comparable market comparatives.
Yeah, Matt, I think when people start to dig into these financials, it really helps for a seller to know the answers. And so it sounds like most people should know this, but you'd be surprised at how many times CEOs don't know their numbers as well as they should be. And so sometimes it's just not the focus area. So it's imperative when you're thinking about pitching your business, understanding just the raw numbers, the revenue, the profit, the margin, the how you are throughout, that really translates well to buyers. And that confidence within those numbers is important for you to have. And I think, man, you nailed it. There's a lot of discussions that are around deal structure, and that really goes into your management intention, and I think more we'll get into later. But that deal structure comes up front in the financial discussion as much as to see what you want to do. Do you want to be married together? Do you want to move off in the sunset? That really changes the valuation of the business. In the back of their mind, they're thinking, what is your firm worth? Where can I find value? How can we both be prosperous and profitable in the future? So you're going to hear exact questions like, can you break down your gross margins by service type, and what's your most profitable segment? Or how do you handle working capital adjustments at closing? So they're going to be very specific. And then as time goes through, having the answers to that is really helpful.
I think you're absolutely spot on, Ryan. And I think that the data tells a story, but also in preparation, being able to tell the story behind the story.
Mhm.
An example could be uh, you released a new service line in the last year, and you're super excited for that service line, but that in that first year you might see a lower gross margin for that service that you released, and yet you're conveying how excited you are for the future of that service line, and left alone, a buyer may say, wow, geez, these guys are super excited for it. It's got a lower gross margin than another service line over here. Now, there can be an absolutely strong and good and why and explanation for that, that you reduced the offering price out of the gate to establish the user base, et cetera, right? So being able to have the data ready, have it be clear, have it well understood, but then also be ready for the story behind the story, which really allows a buyer to understand and get excited about the financials themselves.
Yeah, yeah. If that's to transition a bit from the financials, and we'll look at other areas and questions where buyers are asking questions, they typically end up asking a lot of questions about operational and integration considerations. So think about the systems that you're using, or the process used to develop. Matt, what are some questions that buyers are asking when you think about these operational things? What are a few themes of those questions?
Yeah, I mean, well, go back to, what we talked about. Obviously, they're assessing synergies, right? They're assessing commonality of thought, commonality of management philosophy, et cetera, et cetera. So, a fair amount just in the bucket of integration readiness. They're also looking for alignment or misalignment as it pertains to tool sets, right? The infrastructure, the tools that are being used by the organizations. Yeah, a lot of founder-led businesses have adopted, NetSuite, for example, and an acquiring company, will look and go, oh, okay, great, they're on NetSuite, we're using NetSuite, this is going to be easy, right? Or well, no, they're on NetSuite and we've integrated other companies, even though, we are on IFS or whatever it may be from an ERP perspective. Across the spectrum of IT services companies, in custom app dev or cloud firms, what are the tools being used to most often produce the deliverables that are in place? And broad case, is it a Microsoft shop, or is it an open source shop, et cetera, et cetera. So looking at the overall tools that are being used, both from a back office, front office, CRM systems, et cetera, and then looking at the processes, and then looking at the organization that is responsible, and again looking at some of those synergies. Oftentimes, buyers are, looking at firms who have done acquisitions themselves. How have those acquisitions been handled? Does the selling firm have experience in integration, right? And that's obviously seen as a plus, right? So a variety of considerations, all in the context of integration readiness, so that the firms can be put together and more quickly arrive at that 1 + 1 = 4, 5, or 6.
Yeah, and Matt, a lot of the questions that you hear, kind of what are back end systems. I think seller should be. This is not a great opportunity to show your operational maturity, and that can end up helping with the valuation. And so, if you have discrete processes that are backed up by technology and tools, it can really help the business at hand. And if, for example, if you're a platform company, that could be the basis of where all the next acquisitions go. So understanding just how you do business in those ways is helpful. But Matt, I'm curious here, when you think about these operational questions, how often are those deal breakers? If I was, for example, if in the managed services space, if someone's a Kaseya shop and the buyer's a ConnectWise shop, does that do people have to be guarded about the systems that they use, or is that something that will typically be evaluated in a transaction?
No, I don't think that that people should be guarded. I think that, you know, buyers understand tools are tools. I think that as important is the processes and the use, the consistent use, right, that of the tools, which demonstrates operational efficiency. Sure, obviously, if there's a firm that's standardized on ConnectWise and the seller has also standardized on ConnectWise, well, that's a plus, right? But the use of tools are rarely, if at all, the deal breaker itself. It's just used in, again, analyzing the workload and the amount of work that it's going to take to bring firms together.
Yeah, that makes sense. Yeah, if I was just to switch gears here, and this is a huge thing, and I would say that every deal will come to this question sooner than later. Is really around the leadership and your intention. So, what is your leadership and retention post transaction? So, the retention becomes important as you're looking at keeping those key employees. If you in the market of IT services, the people that are running things are critically important. Um, Matt, what are some questions that people are asking? What are categories asking around leadership and retention?
Yeah, most often it's as simple, Ryan, at least to start out, is what is the seller looking for? And so our job is to clarify, well, what do you mean, what are they looking for? But they're saying, look, are they looking to exit completely? Are they looking to exit as quickly as possible? Are they looking to partner? Are they looking for an opportunity? And that's the first place to start. From there, if they're looking for an opportunity and they're looking to sell in, as we talk about, is what type of role is going to be most attractive to the seller, and what type of role do they best align to? Um, and is that an opportunity for the acquiring firm to make themselves better? By retaining, that owner, the CEO, and or any of the other people who are in a partnership, for example. So I think that's the first one. If there is alignment that, the seller is looking to sell in and the buyer is excited for that participation and identification of role is understood and there's an opportunity there, then, oftentimes buyers are interested in understanding if the former owner or former ownership team is interested in participating in an equity role as part of a transaction, right? Because many buyers love the idea of that ongoing ownership participation from a seller, because then they are truly partners and they're partners together in creating additional value for the new company. and that's for, that ownership team, potentially founders, et cetera, et cetera. But obviously, they're using that as a first way in assessing the overall management team and where are there opportunities to make the new co better by bringing in key members and then also where are there duplicates, right? And those are opportunities for synergies, but a buyer is going to need to assess, what are you going to do in those situations as well.
Yeah, I think one of the key takeaways for a seller in this point is that you really need to have your plan established. What are you going to do in making that decision, and then B, if you do have a decision to sell out or to move on, that buyers really want to have confidence that the team that's left is going to continue as good as it is without you there. And so be prepared to have a lot of questions about your team structure and ability to execute within that. As a side note here, when people start looking at organizational structures and org charts and everything else, you want to keep the names of your employees blinded until you're really far down into diligence with one buyer. Same can go with the lists of your customers. And there's some things that even though a buyer might ask some big questions around your employees or customers, keeping that information close to your chest until a deal is near done is critical for to keep things moving forward. If we switch gears again from leadership and keeping that team around, Matt, a lot of times buyers really want to understand the growth story. And when it comes to that is the go-to-market strategy and sales and marketing functions. Especially IT services firms where you oftentimes have a founder who's really established a lot of the business. It seems like there's a bit of a premium that can be given to firms that have developed sales and marketing prowess. What kind of questions should sellers expect from buyers around the market strategy and sales?
I think that you raised this up, Ryan. This is an absolutely key aspect of the discussion, and it has to be demonstrated through the data, but being able to convey a well thought out and exercised and efficient go-to-market strategy and associated marketing and sales functions is absolutely critical to maximizing valuation, right? So you are able to demonstrate a strong customer acquisition strategy. So, the question, how do you acquire new customers, right? From there, how many new customers, what is your metric or your KPI related to new customer acquisition? And then, what is the historical trend related to that? And that how do you obtain new customers? How do you acquire new customers? Is a big question with a lot of complex answer, right? Because in answering that question, you're able to highlight your marketing function and your marketing strategy. You're able to highlight the connection, collaboration, integration strength of marketing to, sales execution. You're obviously able to highlight your advanced sales organization. You're able to differentiate if you've got a strong business development function versus a strong account management function, et cetera, et cetera. And then going beyond that, as it pertains to sales and growth of revenue, you're able to demonstrate being able to grow customers and demonstrate how you are capturing a larger percentage of any individual customer spend. You're able to highlight your ability to retain those customers as a foundation to continue to be able to grow upon. So that one question of how do you acquire new customers really leads into a lot of other aspects that you're able to demonstrate, your overall strength in executing on a go-to-market basis. I'd be remiss to not mention that it's also an opportunity for you to be able to demonstrate the progress of your service line, the ability to deploy new services, the ability to deploy advanced technologies, the ability for you to be able to close customers' gaps very quickly and be very fast, right? And then obviously your ability to just demonstrate the strength and expertise of your team. We know that all of those things have to come together to then produce the results and the corresponding data that show, real strength in the overall go-to-market strategy, and then the execution of marketing and sales and service development.
Right, right. I think that's exactly important. Whether it's the people, the processes to show that you have a growth engine, that's typically rewarded with higher valuations and deals getting prioritized. And the other part that I'd say within this, and it somewhat goes to the competitive and landscape, is you will get questions of who is your competitor. You'll get questions about how are you different. You'll get questions around just who your customers are. So typically when we're helping a company prepare to go to market, we're looking at every customer and we're looking at their industry, their size. We're looking at what's sold to each one of those customers and how they can be grouped together. So having that customer story and that growth story and how that really goes back to the first thing we talked about of a strategic alignment is, I think, critical to answer some of these questions.
Yeah, and one more to be ready for, Ryan, is talking about customer churn,
Exactly.
customer
Yep.
loss or customer churn. It happens, right? I mean, everybody has a level of customer loss or customer pause or customer decrease, right? And the data shows that. But being able to convey the whys, right? It also plays into an overall handle on the business and an understanding of customers and an understanding of market.
Right. Right. Matt, these are some overall questions. We hit on a lot of different areas. Was there any other general areas you wanted to discuss today?
No. I mean, I think that this is really helpful, and again, to reinforce this comes from a mountain of data that Revenue Rocket has in all of our conversations with buyers, really across the landscape of IT services, tech-enabled services, as buyers are assessing various acquisition opportunities, right? So I think this is great, Ryan.
Yeah, I agree. It's a great topic. If I was to summarize a few things that we heard, sellers, you really got to be prepared for aligning your strategy to what a buyer is looking for and understanding really the thesis of that buyer and how it aligns with what you can do. Be prepared for really in-depth financial and operational due diligence questions. It helps to be transparent on your revenue sources, transparent on your margins, and really get a handle on that customer retention. It helps to understand if you have a documented integration strategy or if you did past acquisitions, buyers are going to want to dig into how those acquisitions have been done and merged and standardized and how that can play a big role in the future of an even larger entity. To really be prepared for questions about your transition and your role in the future. So the retention plans from either you or the retention plans of your staff should be clearly defined to make sure the buyer has a lot of confidence in post-acquisition. And then I think be prepared to highlight your opportunities within the customer base. So there might be a cross-selling opportunity or untapped potential in buyer's market base that you might be able to cover and vice versa, especially if there's a service line expansion that gets really exciting for buyers to see where their customers are at. And then also just be prepared for questions about the market in general, the competitive landscape, and how you fit within that, and how you could all be better together. This again will be. I think we'll dig into this topic more in the future, but I think it's a great topic here today, Matt, and I'll leave it to you for close up.
Well, as our fearless leader likes to say, I think we'll tie a ribbon on it. Thank you very much for joining us. Mike will be back soon. So please come back and listen to more episodes of the Shoot the Moon podcast. Have a great week, and we'll see you next time.